Hello and welcome to Ask Me for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving right into. Markets popping Wednesday on Wall Street as investors are feeling more confident that a Fed rate cut is near. At the end of the session, all major indices ending the day higher. And investors want in on AI. We're taking a deep dive on how it's changing the investment landscape in more ways than you think. And the car event of the year is coming up. We're previewing what's driving the Monterey Car Week. Well, the future of investing isn't active or passive. It's AI powered, and many are scrambling to get exposure to the right AI companies. Doug Clinton is the founder and CEO of Intelligent Alpha, the first asset manager built on modern large language AI models. Doug, thank you as always, my friend, for being here. Just to remind folks, Doug, your firm at Intelligent Alpha, what you're basically doing, Doug, is you're using large language models to actually pick stocks. Remind me again of the process. How does it work, Doug?
Josh, it's great to see you as always. And what we do is we use three of the leading large language models, names that you probably recognize like GPT or Gemini. We use them to go and do stock analysis. So we give the models a certain amount of data that we sort of curate, and we believe will help the models understand what a stock is, what the underlying business actually does, and then whether it's a good investment. The models look at that data just like a human analyst would, and then they create a portfolio that is our final output. A human oversees that last part of the creation to make sure that there's no hallucinations or other AI issues. But that's how our process works. We use AI to basically create these stock portfolios end to end, like our Livermore ETF LIVR.
When you, Doug, think about this Q2 earnings season, and you look at that mega AI trade and trend, Doug, how healthy, how resilient, how intact does it look to you?
I think it's still intact, but what we're seeing is a little bit of a changing of the guard. And so if you think about kind of the last 2 or 3 months, so since the market bottomed in May, we just had almost anything that touched AI, anything that was tech, felt like it was on a tear, and we had a lot of companies up more than 100% over that 3-month time span. CoreWeave being an example, that one got hit a little bit today. But I think what we're seeing now is everybody kind of rushed into anything AI, and now I think we're starting to see investors pick and choose a little more as we've seen the earnings numbers come through and see which companies really are sort of delivering on their AI promise and which ones, maybe just got caught up in the hype. In terms of our models and the AI trades that our models like right now, obviously we're still fans of Nvidia, but Micron and Arista are two other infrastructure players that our models are still favorable on.
So with Nvidia, and of course they've got earnings on deck. Listen, you would listen to those big tech earnings calls and you would hear about how they are just dedicated to spending on building out their AI infrastructure. Given that, Doug, you expect to hear what from Nvidia when they report?
We think it's going to be another strong quarter from Nvidia. I think that's probably to be expected at this point. So the question is really going to become, what is priced in and sort of what's the whisper, the hurdle they really need to beat. I think at this point, though, the commentary we saw from the mega caps, almost everybody reiterated, there's no slowdown in spend. We heard from CoreWeave earlier today that supply is still a problem. Demand is still very strong. And so I think you're going to hear a pretty good number from Nvidia. The stock has been on, a pretty good run itself from that May low. I think they'll probably be able to do enough to keep investors excited. And we'll also start to be hearing about some of their next generation chips as we think about what could happen next year for the stock as well.
Doug, when would I get cautious on Nvidia? Would it be, do I have to just wait and listen for Nadella or Zuck to tell me, hey, actually, we're going to start cutting big on our AI CapEx?
I think at that point, it probably would end up being a little bit too late. I think what will happen is we'll start to hear real serious rumors and probably real projects being delayed in terms of some of these larger infrastructure build-outs. There's been these sort of small rumors and like reallocations that people have brought up. Microsoft is often in the news associated with this. And those have just been, I think, sort of noise for the most part. But I think the real first signal is that at some point, and I still think we're probably at least a year away from this, if not more, we'll start to hear about bigger projects getting pushed back and then maybe bigger projects even being canceled. I think that's your real sign. And then I think you'll hear the mega cap CEOs saying, hey, our CapEx is flat this year, right? Which I think would be a bad thing for Nvidia.
So those models you discussed, Hug, so they said Nvidia is one to own. What do they have to say about Apple? I'm curious.
Apple is one that the models have not owned. And in terms of just the Mag 6, I'll just confine it to that. Our models have been a fan of over the last quarter at least, of Nvidia, Microsoft, Meta, and Alphabet. Those are kind of the four that our models have bet on. We have not been in on Apple or Amazon. And I think there's actually a really interesting distinction between those two, where the four companies that our AI models are fans of at the moment do have very strong AI businesses kind of across the board, where Apple and Amazon both, I think, are a little bit weaker on that AI story. I think Apple, they had this great White House event. The stock got a big bid because there was good news around at least potentially, tariff relief for them. But I think the big question still remains, which is what will they show us in AI? And I think we're still not going to get much on those answers until sometime next year.
I was talking to your buddy, Gene Munster, Doug, about Apple. I'm curious to get your take. And I was talking to Gene, and I'm paraphrasing, but basically Munster's point on Apple was, listen, they have this giant install base. It's billions of devices all around the world. These folks are loyal, they're locked in, and that gives Tim Cook time to figure out this AI story and strategy. They don't have forever, but they got time. They got a long lead time to figure this out. What do you make of Gene's argument there?
Gene and I have many spirited debates, Josh, as you know. I think he's probably right on that point, though. I think the one thing that I would say to Gene's point is, look, if Apple didn't have this incredible user base, very loyal customers, they might look more like an Adobe, which unfortunately our models also have liked, and that stock has just been hammered because I think the story there is, hey, AI might actually be really bad for your underlying business. And I think that's been a theme across many software companies. And so I think to Gene's point, Apple is probably getting some benefit of the doubt that they can come into this race late, as they often do, still show a really great product, and then ultimately maybe pull out some kind of a win in the future.
I think that spirited Apple debate between Doug and Gene, that would be good TV, Doug. I'd pay to see that. Thank you, sir. Always great to have you on the show.
Thanks, Josh.
More record closes to end the trading day. Yahoo Finance's Jared Blickery joining me now with that and more on the trading day takeaways. Jared.
We got to go with records galore because we have seen a lot of them recently, and these things tend to cluster. And so let's take a look at the NASDAQ, and well, this is a Dow. Let's go to the NASDAQ Composite. Just had its 20th of the year. This chart here is 87 days. This is since that April 8th bottom, and 42%. That was one of the most blistering rallies that we've ever seen in the index, right off of those scary lows. S&P 500, this will be number 17 for the year. So that's up 30%. And you can go down the pike here. Russell 2000 small caps just higher than that, 32%. And you can see they recently broke out here. So I'm a little bit, and by the way, I don't want to suggest that the Russell 2000 is in records right now. It has a little ways to go, but just kind of surveying the market overall. We're seeing this in a broad number of areas. So I can go to XLC, that ticked off another record today, number 11 for the year. That has Meta, that also has Alphabet in it. Then we have the Value, VLUE, that just kind of exploded. That has 4 record highs now. And then a bunch of individual stocks. I could go down the list, but there's a lot of them. So that has me kind of excited right now.
Always going to take a deep breath. Think about potential downside risks.
Yes.
What would they be?
You asked me that at the 3 p.m. hour right at the beginning. I thought that was a great question, so I wanted to explore this. I'm going to talk about liquidity. Is it going to be trapped right now? But just to kind of back up a minute, what could be going wrong in the market that we have to worry about? We just passed some really big tests for the market. We had what was not a great jobs report last Friday, but we ended up much higher, in the intervening days. We had a CPI report yesterday that was actually pretty good for the markets. That propelled a lot of markets to record highs. So if it's not not the macro reports, what is it? Is it valuation? That is a longer term story. The markets can be overvalued for long periods of time. And so one of the things I'm looking at is liquidity. And a really interesting phenomenon is going on right now that's way under the radar. The Treasury has an account at the Federal Reserve, and they have said that they're going to build that up by $400 billion over the next 8 weeks. And so that's $400 billion that's going to be taken out of the system. When this has happened before, sometimes it's caused a liquidity crunch. Sometimes that has spilled over into risk assets. And so this information was brought to my attention by Alfonso Picatiello of the Macro Compass. And here's a quote from his latest report. The $400 billion plus increase in 8 weeks could be one of the most aggressive Treasury general account. That's that Treasury account at the Fed rebuilds over the last 10 years. And so that's what I'm paying attention to. I would also add, you weren't here yesterday, but I got to break down the VIX seasonality with Ali Canal. Historically, the VIX tends to rise at this period of the year into October. So we could have a market crash, but that's just history. Doesn't speak anything as to like current fundamentals or anything.
Should we talk crypto?
Can we talk crypto? Because Ether is going to the moon. 4,500 was my last holdout. It's not a record high for Ethereum, but it just passed that with blazing colors. And I'm going to show you a chart here. Let me get to our crypto map, and I'll put a longer term Ethereum chart so I can show you the resistance that it just cleared. Here's 6 years, and here is this multi-year consolidation, about a year and a half, that we just broke out of. And it has only taken a few days to climb from basically 4,000 to 4,700. And if I put some candlesticks, you will see the intraday high. We are right there at the Rubicon. So almost record highs for Ethereum that we're looking at right now. This has important implications. Stable coins are in the news, the Genius Act and everything. Ethereum is kind of the layer that enables all of that. You can have other layers, but Ethereum seems to be the winner here. Market is taking note, and we also have all these companies. You know, we know Steve Saylor's company Strategy is buying Bitcoin. Now we have companies buying Ether. So I think that's part of a new trend, and that's just getting me bullish on crypto.
Let's end here on the dollar. What are you seeing?
Dollar has been heading down recently, and that's not necessarily bad for the markets. That can be a risk-on move. Sometimes when you have the dollar going down, what you don't want is to see bonds also getting sold, which means yields are going up. So you want to see the dollar going down with yields, and that's what happened today. Now, around Liberation Day, that was kind of towards the left part of your chart there, that was a different story. You had the dollar index going opposite yields, and that was a case of the whole world trying to get rid of all these dollars and dollar-denominated assets. So far, this looks like just another risk market kind of tailwind. So I'm going to take it for what it is. If it crashes, it's not good, but just a little bit of a downside is not bad.
All right, well, in there. Thank you, buddy.
You
Appreciate
bet.
it. Thank you. Coming up on Ask for a Trend, recent developments in the media industry. Stay tuned. Recent deals like the NFL's 10% stake in ESPN and Warner Brothers Discovery split have highlighted the change in the media industry. Yahoo Finance senior reporter Ali Canal spoke to PwC's Bart Spiegel about the current shifts and trends.
The leagues have a lot of power at this time. They're content creators, right? And so anyone that owns content, owns IP, we always say content is king, right? And it's no different with these leagues that are creating this content and putting out there and striking really creative deals as well to ensure that their property, their IP, continues to be popular in perpetuity.
That's a great way to think about it, right? That is their IP. If we look beyond sports, what's the next content category or experience that you think will create that sticky moment for consumers?
So it's interesting. 2026 should be a really big year for video games. We really believe that. You've got the esports Olympics in 2026. You have a really prominent title expected to be released in 2026. And video games just helps the whole sector in general, right? They come up with original IP that is then marketed for TV and movies that you see being played out. You also see video games utilizing a lot of their technology and infrastructure to help in film, special effects, TV, et cetera. So we see a really big year for video games in 2026, and our forecasts show that. We also see, don't sleep on live experiences either. Because I think live experiences are extremely important. You'd have, that's where a lot of money that's going for the 18 to 25 really sought after demographic. That's where they're spending their time and energy, because it plays into the whole social media platform as well, because now they can go do these live experiences and post it to social media for their friends, their followers, et cetera. And that's really attractive to them and really compelling to them. So I think live experiences are going to continue to be extremely popular. We have it, the spend on live experiences still exceeds the spend on digital experiences, and we expect it to continue.
And to that point, Live Nation earnings, they've been crushing, and a big part of that is people are going and traveling to see a lot of concerts. So that's a great point.
Yep.
When we look ahead to M&A, it was a bit stagnant in the entertainment space. We saw a bit of activity. We finally got that Paramount Skydance deal going through. What are you watching for when it comes to upcoming deals? Do you expect the end of this year and into 2026 to be a lot more active than what we've seen?
I definitely do. There have been a lot of announced spins, separations, things like that. And I think when you look at the OTT streaming environment, it's really kind of happened in a bunch of different chapters, with the first chapter really being focused on, okay, let's just throw money at content, throw money to get people and subscribers onto the platform. Then the second chapter was really, let's take a step back, focus on ROI, focus on really making sure that we've got a profitable business. And now I think you're going to look at chapter 3, which is what you're seeing happening right now, real time, some of the things that you mentioned, which is, okay, what are some creative partnerships, joint ventures, M&A, where there's going to be some level of consolidation in the ecosystem, because we've done studies ourselves where the average consumer doesn't want to pay for 10 subscription services. They want 3 to 5 subscription services. And so, this allows them to consolidate, take advantage of economies of scale. And that's what I think we're going to see in the next year. But then going out from there, I think then it's all about what other things can you bring to your platform? Video games, social media, user-generated content, and that again will just continue to apply that stickiness factor, where people are willing to pay more and limit the churn that you have on your platform.
Monterey Car Week is one of the biggest events for car enthusiasts, ending with the Pebble Beach Concours d'Elegance. Yahoo Finance senior autos reporter Praz Sumeranian will be there and join us now to tell us what to expect. Praz.
Yes, Josh, I'm getting ready for this big event. Every year I go, it's really busy and crazy, but it's always been fun and always seeing a lot of interesting things and meeting a lot of interesting people. So I have a couple of things to watch, three things to watch just for our purposes here. So number one, Pebble Beach, Monterey Car Week is about auctions, right? Will there be an auction rebound this year? So last year was kind of a downer, a big miss versus estimates across all the different auction houses. The estimate this year is around $388 million across all those auctions. Sounds like a lot of money, but that's down a lot compared to years past, and about the same as what we did last year. So the big question is, can they do better than that? And also the question is the bubble sort of popping with classic cars? It's been sort of taking off since the mid to late teens in the last decade. So what we're seeing is that there's a changing taste for newer cars. Maybe the auction houses will cater to the newer modern classics, and maybe that'll sort of up the game, up the numbers to them. Number two, besides old classic cars, you got a bunch of new cars and concepts that will be revealed as well. Lamborghini, for instance, is an ultra exclusive car coming out in the probably car less than 50 cars made total for their best customers. We're talking about $1 million plus range. Bugatti will have a one-of-one car called the Brouillard. We're talking about $15 million. It is pretty insane. 16-cylinder engine, you know the deal. Back down in planet Earth, Acura, Infiniti, Japanese brands have more accessible cars, SUVs, potentially an RSX nameplate coming back as like a crossover. Even Rivian and Lucid will be there with the one-off cars for Pebble Beach, Monterey Car Week. And finally, the third thing, I've mentioned people talking, execs galore, CEOs from all different types of companies will be there. We'll hear from the Lambo CEO, Bentley CEO. We'll even have, Josh, the Infiniti North America head live on your show on 4:30, a half hour on Friday, discussing their new SUV. They're going to debut world premiere at Pebble Beach. So a lot going on there. A lot more executives we'll be talking to. So we'll get covering that big game for everyone at Yahoo Finance for Monterey Car Week.
Praz, for the classic car lovers listening right now, what are the top models at auction?
I mentioned the fact that there's been a taste for newer I guess that you call modern classic cars from 1975. I know, 1975 and newer. But if you look at the top top five cars that are expected to go up to the highest amount, the hammer price at auction, they're all older Ferraris, right? The 61 Ferrari 250 GT SWB. You do see a newer 93 Ferrari F40. That's an iconic car. I love that car. A 73 Ferrari Daytona Competizione. This is a race car. I mean, you don't get more rare than that. Then also, of course, the 61 Ferrari California Spider in that very unique sepia tone, similar to that Ferrari you saw in Ferris Bueller's Day Off.
All right, thank you, Praz. Appreciate it. And be sure to tune in to Ask You for a Trend, as Praz was just mentioning there, Friday, 4:30, for an interview with Vice President of Infinity Americas, Tiago Castro. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.